Hello and good afternoon and welcome to Talking Points, where we look at matters relating to all aspects of creating, growing and managing your wealth for our future generations. Now, you are always welcome to join in today's conversation by asking any questions you may have regarding the topic and interact with our expert and share your opinions. If you're watching live on YouTube, you can just add the questions to the YouTube chat box and we'll get to as many of them as possible. Now, of course, we are based in South Africa, for those of you who don't know, so we're always reliant on our internet providers and our electricity service providers. So we are not always able to go according to plan, but like they say here as well, a boer maak 'n plan. So here we are, it might be a day late, but we are here and we are live with you. My name is Damien Anderson, and today we're going to be talking to the point of personal tax and how you can prepare for it and what are the things you need to be looking out for in particular. Now, you might be quite unaware that COVID-19 has not just caused an upset in your personal life, but also in your personal business affairs too, and in particular, your taxes. So you need to make sure that you're prepared for this upcoming tax season so that you're not caught off guard. Now, today, once again, we are joined by our very capable tax expert who has been making tax his core business focus for more than 10 years since joining Destinata Accounting. He's also one of our Wealth Masters service providers since 2010. And Cassie has been a member of the the South African Institute of Tax Professionals. So I'd like to welcome Cassie Henning.
Thanks, Damien. Thanks for having me.
Fantastic. Cassie, welcome back to another episode. I mean, we enjoyed your insights so much last time. And with the tax season looming, I thought it would be so great to get some more insight into how we can plan and prepare for a successful tax season. And I know it's a very busy time for you, so we sincerely appreciate the time that you've given us today.
Thanks, sure.
Awesome. Now, tax. Now, that is something that we are not taught at school. And Albert Einstein, who is arguably one of the smartest men in existence, he was also the guy who devised the theory of relativity. So, I mean, like, he knows what he's talking about. He was quoted as saying, "The hardest thing in the world is to understand the income tax." Now, there's something I cannot disagree with. And because it's something we don't learn at school, we need people like you, Cassie. So thank you for taking the time. And, you know, having had the opportunity to learn and understand how and what to do for tax, it gives us such a great gift, and, you know, it's going to expand our mind so much more. So because we've got so much to talk about, I'm going to dive right into it and just ask the first question and say, who needs to register and pay for tax in South Africa?
Thanks, Damien. Okay, so basically, you must be registered as a taxpayer if you earn basically an income in South Africa. First of all, so anybody that that is earning an income tax can be a taxpayer. Even a baby can be a taxpayer. When we talk about trust, then the babies and the children obviously plays a role, but then you can be a taxpayer, so you need to register. It's not to say that you are going to pay your tax, but if you earn an income, you need to register for income tax. That's as easy as that.
Fantastic. And then, Cassie, now I think everybody knows that we pay income tax, but what are the other taxes that people might not be aware of, or other taxes that we need to look out for, not necessarily to try and work around, but just to be aware of at the back of our minds?
The first one that comes to mind, actually, and this is where a lot of people have property on their personal name, is capital gains tax. They're not always aware that they must pay capital gains tax. So if I've got a primary residence on my name, that's not a problem. But when it comes to your second or third property and you sell that property, and there's obviously capital gains tax payable. So that's something number one that people need to be aware of capital gains tax. And then obviously we all know about all the other taxes that we don't even know actually about, but it's like VAT and carbon tax. So there's always taxes on something that you buy and you're not even aware of it. We can't claim anything against that, but that is just how that's the tax law. That's how the government makes their money.
Exactly. And I mean, it's something we can't avoid. And you mentioned tax registration. Now, everyone obviously has a tax number assigned to them. How can you check if you have a tax number, if you've been registered, Or if you aren't registered, how does one go about actually getting registered?
Okay, so you need to register for income tax whenever you start working, or normally your employer will register you, or you need to register yourself for income tax. So basically, if you don't have your tax number, then you need to go to a SARS office, take your ID, take your proof of residence and bank statements to SARS, and they will give you there and then your tax number. So if you know you got a number, but you don't have that number anymore, the unfortunate thing is you need to phone SARS. And I've been on phone SARS last week, and I've been number 905th in the line. So unfortunately, at that stage, they're very busy. But you can also pop into a SARS branch and get it. But yeah, there's not really an easy way to get a tax. Find out if you're tax registered. You need to phone SARS for that. Or you can ask, obviously, your tax practitioner to do that for you. They do ask security questions, and that's why you'll need to have your information on hand for that.
I mean, I suppose it's one of those inevitable things that you have to do it. And once you know you're registered for tax and you've got your tax number, I think then that helps a lot, for the people that don't know. But now let's say I'm registered, I've got my tax number. Now I need to do my tax return, whether it's my first one or if it's my annual tax return. I always find that there's so many documents that they need, and then they need to substantiate this and they need proof of this. How do we go about preparing and getting all those documents ready? Is there sort of almost like a cheat list that we could look at to know, we need to make sure we have our medical certificate, we need to make sure we have this and that? What can you advise our viewers to, assist them in that aspect of making sure when they do their return that they're very much prepared?
Okay, so first of all, when you are a pay-as-you-earn employee, when you pay as-you-earn, and if you only received an IRP5, now IRP5 is a document that you receive once a year to state what everything you received during the year from your employer. So if you only have an IRP5, you don't have a medical aid, you don't have a retirement annuity, you don't have a travel allowance, if you only have one code, source code basically on your IRP5, and it's below 500,000 Rand or 350,000 Rand, sorry, then you don't need to submit anything at all. SARS automatically will then submit it. So then you don't need to submit. But as soon as you have a medical aid, a retirement annuity, travel allowances, bonuses, or whatever on your IRP5, then you need to submit your documents. Now, first of all, you need to know, for people that's straightforward, earns a salary, maybe have a pension and a medical aid, then it's that. But when you come to having investments, you need to have tax certificates from each and every investment that you make. You'll see even the bank sent you they call it an IG3B, interest certificate. So even the bank will send you at year end, 28 Feb, normally after that, they will send you a tax certificate, and you need to have that with you. Remember, when you're doing your taxes or you're giving it to your tax practitioner, you need to give them all the documentation, because if we go onto SARS, and we can see, because some of the tax certificates are already preloaded. So your medical aid is normally preloaded, your retirement annuity is preloaded. So if we submit and we don't have proof of that certificate and there's an audit, then there's a problem. So that's why you need to have, although it's preloaded on the system, but you need to have the proof with you, because SARS will ask them to upload that documents to them. So yes, there is basically a list. You need to know. It's all depending it's all depending on what type of income you have. Obviously, if it's rental income, it's going to be part with all your rental income related invoices, your expenses regarding the property. So depending on what you do in your personal name, there is basically a tick sheet that you can tick and say, listen, this documents, I need to get it before I do my tax return. Okay.
Awesome. And Kasi, now, I mean, speaking on the documents that we need, when it comes to medical aid contributions, how are we being taxed on that, and how are we getting a benefit from that? So, I mean, every month we're paying for the medical aid, and on the little tax section on the IRP5, there's a little section there, but how does that then relate in the bigger scheme of things of how we can then benefit from themselves and how they benefit from us?
Okay, so tax medical aid can be paid by your by your employer or 50-50 or so on. But that's a benefit that you get. That's part of your cost to company, so you're being taxed on that. But what the government does and say, oh, thank you guys, thank you for having a medical aid and not putting a burden on our what do they call it, state hospitals or provincial hospitals. So we will like to give you something back for it. And at this stage, it's 319 Rand per month for a member. And then obviously for a second, for the spouse or second member, it's also 319 Rand. And then thereafter for the dependent on that, that's a 250 Rand. So depending on how big your family is, but you need to be the medical aid payer. So the medical aid, the person that pays the medical aid or is the main member of the medical aid, he's the person that can get the benefit for that. So then at the end of the year, SARS come back to us and say, listen, I'll give you this rebate because you actually help the government to not overcrowd our hospitals. Thank you for paying your medical aid. It's at least something you're getting back. Exactly. For the price for medical aid, yeah.
We always take what we can get, and if government's going to give us something, why not? But then in the same vein, let's then talk about retirement annuities, because I know that's also a great vehicle to lower your tax. So, you know, in the same breath, how does that then work, and how do we get the tax benefit from there?
Well, you can, with all the contributions you make to a retirement annuity to up to 27% basically of your income, you can claim that basically back from SARS. So same thing with medical aid. Thank you for not using the state pension. Thank you for having your own pension. We'll give you some rebate. We'll give you some tax relief on that. And then it's being calculated on the amount that you've that you contributed basically to your retirement annuity and so on. It's a retirement annuity, and I always say to people, you know, with our section 12 or 12J company as well, that's also a type of retirement annuity for me, because that reduces your tax liability, and a retirement annuity does the same as actually at the end of the day. So yeah, you pay less tax because you get a rebate to it.
And then, Cassie, obviously, while I was doing my research, I saw a cute little line. It said, what is the difference between tax avoidance and tax evasion? And the answer is obviously the jail walls. So I think a lot of people take a lot of liberties when they are doing their taxes. And one of those, especially now with Corona being a thing and people working from home, is office expenses. So what can you really claim? How can you claim it? I mean, if I'm working from home, does my whole home then become my office? Can I claim for all of that? You know, my electricity, if my fridge breaks, if I need to buy milk. I mean, surely there's ways that we can have a ruling of what can and can't be done.
Yes. Okay, so yes, with COVID or Corona, our life did change a bit, and we are going to see more of this happening, people working from home. It's very, very interesting that SARS has issued a few letters regarding the expenses that you can claim regarding working from home. Remember, you need to have suitable internet at home to do your job. You have to make phone calls and all of that. So normally what they would say is, if you've got a 3-bedroom house and you're going to take 1 bedroom as your study or your workspace, then you work out that square meterage towards with the big house. You take that into consideration. You get a certain percentage of the house, that percentage is basically tax deductible. So say, for instance, I'm paying rent or whatever, then 18%, let's say 18% of the rent that I'm paying, because I have to pay rent for that specific office space. And this is now where it comes into people before Corona as well, but people working for commission or 50% of more commission, and where you need to have an office at home. That is now before Corona. Then those people already did it. So then 18% of the rates and taxes, or 18% of the not a mortgage bond, but the interest on the mortgage bond, your cleaning, your telephone, your internet, that type of thing, that is all related to that room. That can then be deducted against obviously your income. So from next year on 2021, a lot of us that had to work from home and had to get new internet or whatever, they will have then that benefit to deduct the home office space. And I think it's something in future that's going to happen a lot. Yeah, unfortunately, the offices will be standing empty, but our houses will be our new offices.
Of course.
Yeah, so there is, just getting back to it, it's a certain percentage that you can deduct then as an expense.
But on that note, how is that being monitored or sort of audited by SARS? You know, if they've never been inside my apartment and they don't know sort of what size I'm using, are there ways that they can then in the end come do an audit of that or not?
They can actually knock on your door and say, show me the room. Basically, what I normally tell people is let's pull they call it a light sun or something, a graph, a estate agent graph on showing how big the premises is and whatever. And I'll attach that when there is an audit, I'll send it to SARS, because on that document, it says the square meter of the house, it says the address of the house, it says what type of building it is. And then, yeah, sometimes there's a small little building, a plan, house plan with it. So there is a way that you can show to SARS, listen, I'm not lying to you. Here's the square meterage of the house. Basically, here's the room size. It's 12 square meters or 16 square meters, whatever the room size is. So yes, they audit. If they do an audit, they want obviously all the slips. And that's where I think you need to get your tax practitioner in, because we know how to draft the audit letter, if I can say it like that, and the supporting documentation, because there's certain stuff that SARS wants to know and certain stuff they don't want to know. So obviously, yes, you need to give them a summary of what everything else is, and then obviously all your supporting docs relating to that office space.
Awesome. And now, I mean, we talk a lot about working from home, and many people have taken on the work from home strategy as a result of COVID-19. And, from what I've seen, a lot of people are going to continue this, regardless of what happens in a year or 2 years' time. So that then obviously will affect their travel allowance. So how is the travel allowance then going to be handled from 2021 onwards due to all the changes that have happened in the recent past?
SARS also did a few letters on this as well, and this is very important to remember with lockdown. If you were not an essential worker, you did not travel for work. So travel allowances normally works, you being taxed on a certain percentage, 80% of the travel allowance and not the rest. But you work from the office and then you drive to a client and you come back, and that kilometers you can then claim as business kilometers. Now with hard lockdown, and if you're not an essential worker, you did not travel. So you were taxed not on the full amount. And now next year, when it comes to the tax return, that 4 months that you did not work, you can't claim any travel for that. So there is going to be a tax difference. And people must be aware they are most likely going to have to pay their tax in. So in this year, they might have got some tax money back, a piggy bank from SARS. We all hope we're getting something back from SARS. But next year, you might get something back now, but next year you might be paying something in because of your travel allowance. You did not have enough business kilometers. And that is very important that you know. And if you're not going to travel anymore, to clients or whatever, you only going to Zoom, then you need to change that on your package, or your speak to your HR or whatever, and take travel allowance off of your because otherwise you're always going to have to pay that extra tax in, because you've got nothing to claim against it now. So people must be aware that if they don't have enough business kilos for 2021 book year, they will have to pay some of that tax back.
I think that's
or they were taxed. Let's say they were not taxed fully, and then they'll have to pay the tax in. Yes,
and that's a good point. And I think, Kasi, a lot of people who, try and do their own taxes, they're not going to remember that. And, I think a lot of people...
We're going to have a lot of people next year basically sitting and say, why do I need to pay my taxes in? Why? Last year I've got 60,000 Rand back. This year I have to pay 20,000 Rand. And remember, travel allowances is a big, in big companies or big salary earners, it's a big part of your salary. That is a travel allowance. And that can amount to a lot of money that you need to pay back to source.
Absolutely. So it's a good thing to look out for.
Yeah.
And now...
Definitely.
Let's talk about cryptocurrency. So there's been a lot of talk about it recently. How does a South African get taxed on their crypto? Because I think a lot of people use this as a vehicle to sort of put cash aside and, without the hungry taxman seeing it. So is this still the case? And how are we being taxed on that?
Well, actually, on the personal tax return, they do ask now, do you have crypto? So don't think SARS does not know of it. I mean, the South African platforms that we use to exchange fiat into Bitcoin, they need to be regulated by the South African Reserve Bank. So I don't need to tell the South African Reserve Bank, listen, this guy's putting 100,000 Rand into my platform and they're buying Bitcoin. And then you got an asset. Now I've got an asset. I bought a Bitcoin, I'm leaving it there, and it's going to grow. If I sell it and bring it back into South African or into ZAR or into dollar or into euro, I'm going to pay tax in South Africa on that money because I'm a South African taxpayer. So don't think you can buy Bitcoin in South Africa, go open up a bank account in whichever country and exchange it in that country into euro or whatever, and you're not going to be taxed. If SARS finds out, and trust me, they're working on a whole new unit, a crypto unit, where they say that 2023 they're going to be up and running 100%. So then, because that's where the world is going, it is going into crypto. So they need to keep up. And then basically you're taxed on worldwide accruals and receipts. So in South Africa, you need to declare, I sold my Bitcoin for so many euros at that stage. So that is actually so many South African rands. So then basically you need to pay your capital gains tax on that. Crypto tax is taxed in different ways. It's normally income tax or capital gains tax or income tax, depending on what did you do with that cryptos. Okay, so people must be aware and they must keep good records. This is very, very important. You need to keep records of all your platforms, like your altcoin trader and your Luna accounts in South Africa for those people. You need to keep your statements for that. And then if you put it into another platform and you're buying Bitcoin or trading, you need to keep your trading accounts. You need to keep record of that because there might be something that you've done that is actually taxable before you have brought it into a fiat currency or into the rands, people, South African rand. So people must be aware of that. If you earn commission on cryptos that you're selling or packages that you're selling, that commission have you already earned. It's lying in their back office, or you got a card. And there's a lot of our clients that has cards, a credit card. That commission that's lying on there is taxable because it's there. You can take it. So people must be aware of crypto tax. And it's not always to say that they are going to be taxed. Just declare it. That's what we want to get out there is declare. So that if SARS crypto unit is up and running on whatever, then we don't need to worry about anything. And the other thing is, people think if they buy a Bitcoin, nobody will know about it. I spoke to a lady, and her husband is unfortunately has died, and she wants to get his Bitcoin, and now the executor is involved because they thought nobody's going to know about it. But though the platform won't release it because they know the husband is dead, but now they want to speak to the executor. So there's always somebody watching over this. That's basically what I want to say. So declare what you have.
So basically saying there's no way to hide. The tax
no way to hide. We can do the tax planning accordingly, but don't, and there's, we can avoid it, but not evade it.
Exactly. And now, just talking a little bit more of some of the principles. Now, besides having a very interesting name, Section 13(6), how does this section of the tax affect or benefit the general public?
Okay, so we had a question the other day when we had a seminar where the guy asked, can I do it in a trust, or can I do it in my personal name? Yes, you can do it in any way you want to. So this section of the section 13(6) of the income tax states, if you own 5 brand new properties. So this is where the government want to incentivize us to buy new properties, to developers. You know, buy new properties, that the country is growing, the economy is growing, whatever. So you need to buy 5 brand new properties, not all on the same time, but you can accumulate them over time. Once you have the 5th one, then you can basically write off 55% of the cost price of that properties. That is a rebate that SARS will give you. Now, if I owe 5 properties or my trust owe 5 properties, there's obviously rental income. There's tax that needs to be paid. I'm going to deduct the expenses obviously related to that property, but then SARS comes and say, okay, because there's 5 brand new properties, we're going to write off a certain amount as a rebate. So you were supposed to pay 10,000 Rand tax, but the rebate is 20,000 Rand. So in effect, you're not paying any tax because you have that rebate that helps you when you have that 5 properties. So people must always remember 5, it's very important, brand spanking new properties. It can't be a second-hand property. Unfortunately, there is something like second-hand, or fortunate. So you need to have a letter basically from your developer stating that you have bought the first, you bought the property and you put in the first tenant. So that is what it needs, what you need, obviously with supporting documentation when you do your submissions for SARS as well. We need to prove that SARS, that you have basically bought a new property and the first tenant was in there at that stage. Okay, so you put it in the first tenant. So when you come to the 5th one, then your accountant or your tax practitioner can start doing that section of the income tax for you. And that's a rebate. Lots of people think they will get the money back into their pockets. A rebate is not money back into your pocket. It's just SARS giving you discount. Okay.
Fantastic. And I think people also don't always understand that if you're buying a new property from a developer, you then have the additional benefit of not having to pay the transfer duties. Is that correct?
Absolutely. You don't pay any cost. And the developer wants to sweeten the deal. Obviously, normally they throw in all costs because they're allowed to do it, and that's how they want to get people to buy the product. And yeah, so it's so much nicer if you want to buy a development and you don't have actually that extra cash, then you need to buy development properties, yes. And then you can qualify after 5 properties, obviously, for this section.
And now, Kasi, as far as you know, are there any proposed changes coming in the way that taxes are done? Or, you know, are there new taxes possibly? Are there any changes that we need to be looking out for now in the future?
Taxes will always change because the country we evolve. So unfortunately, South Africa is not in a good space when it comes to money. We don't have a lot of money left anymore. So I think next year we are going to be we're going to be hit harder with tax, and there's going to be more taxes that needs to be paid because of Corona. We need to pay back all that money that we've lent for the other countries, and that the only way it can come from is from SARS, from our treasury. So SARS needs to collect that money. So taxes, yes, taxes will always change. Personal tax, obviously, when the budget speech comes, we only hear basically what they are planning to change or what the increase in personal taxes. Hopefully they won't increase the personal tax this year. They did not last year much, but this year, let's not hope they change it a lot. I think they're going to add VAT. That's my personal opinion. I think VAT is likely to going to be changed again.
Exciting times ahead, I guess, you know. And then, in terms of the provisional tax, now who pays it? What is it, and how can we plan around it? Because it's not necessarily your employer paying a percentage on your behalf. How do we, know that in 6 months' time we have to pay X amount and it'd be, money ready?
Well, a provisional taxpayer is somebody that normally don't get a salary. So, or you get a salary, but you can extra income. So this is where you get a chance of doing a 6 months estimation for your tax. So the first 6 months of the year, you can say, okay, I'm estimating I'm going to make so much money for the year. Mine is expensive, blah, blah, blah. This is my tax that I need to pay. So you can actually pay at 6 months, you can pay some tax. And then obviously after another 6 months, you can do it again. That's your provisional tax due. Then end of Feb, you can do your provisional tax again. And this is where it's normally with people with multiple incomes or not solely one income. So, or your commission earner or people that, as I said, don't get just one salary. So you can plan, obviously you need to plan your tax, because if you don't pay your provisional, they can hit you with understatement of penalties and stuff like that at the end of the year because you did not estimate right. So this is, if you're a provisional taxpayer, I suggest a tax practitioner do it for you, or your accountant does it for you, because you need to be in roughly in a 10% radius of what is actually happening. So you can plan your tax within 6 months. You can say, oh goodness, I am going to pay tax this year. Let me pay this portion so long. And then obviously we did not all expect what's going to happen with Corona. So a lot of people income were actually devastated because there was no income. So you don't know what's going to happen in the next 6 months. It's an estimation. So first 6 months, August, end of August. And this is actually where 12J also comes in a lot, where you at 6 months, you can say, listen, okay, I am paying tax, or and then at November, I would suggest people that know they are paying a lot of tax should have their, let's call it management reports up to date, and say at November and say, okay, so November, I've got so much. Up to Feb, we suggest, I think I'm going to get so much income from November to February. Maybe I should do a 12J investment to lower my tax liability at the end of the day. So yes, provisional tax is planning.
And then, Kasi, that amount that we then need to pay to tax or to SARS, is that a lump sum that we need to pay, or are they offering the option for us to pay off monthly?
Well, if you owe SARS, you owe SARS, and you should pay it actually within 3 days. I know there's a lot of people that has huge tax burdens and you don't actually have the cash now. Then you need to get go to SARS and get an agreement, a payment agreement with them. And they will tell you the terms. Listen, if you don't pay these people, they will go into your bank account and take the money. So rather go to SARS and say, listen, I can't pay you now. Let's arrange something. So yes, there is a possibility. They're not always open for it, but there is a possibility of a payment plan. But as I say, don't run away, because then you're making it worse. Rather go speak to SARS and say, listen, I know I owe you money, but I don't have it now. Can we make a plan?
It's good to play the open cards. And Kasi, we're to the end of the show now, but just quickly, you mentioned the 12J quite a bit. For people who don't know anything about Section 12J, could you just give us like a brief outline of what it is, and if anyone wants more information, where they can get that info?
Okay, so 12J company is a VCC company, venture capital company, and this is a company that is regulated by Financial Services Board and SARS. We take investors' money and we invest it into qualifying companies, which is prescribed by SARS and them. So then that money that you invest is actually deducted from your tax liability at the end of the year. So I had to pay so much tax, I deduct so much, and then basically it can reduce your tax up to 100% depending on the investment that you make. So you can find me or the 12J at destinatoholdings.com, and you can go have a look on the website there.
Fantastic. Thanks, Kasi. And then last question, in your opinion, why is it important to rather pay a tax practitioner to assist you rather than just Googling or asking your sister's auntie to help you with your taxes?
I can ask you if you want to go to the dentist, do you Google it or do you do it yourself? So that's basically the same thing. We know what we're doing. So I know a lot of people are Googling their doctor and then they go to the doctor and say, Google says I'm sick. But anyway, I think if you want to be on the safe side and not owe SARS is not somebody that you want to owe money or get on the bad side with. So I would always suggest a tax practitioner because that's what they're doing all day long. They're working with taxes.
Awesome. Kasi, thank you so much. And I'm sure everyone who watches this is going to learn something about tax and they're going to plan ahead, which is so important. Yeah. Now, also plan ahead and share this video with all of your friends and your social media platforms so that we can help others grow and understand the benefits and that we can help one another to understand what tax is. Because it's something we don't get taught at school, so we need to help one another. And if you like this video, check out the other talking points on our playlist on the channel. You'll find some great content and information on matters relating to wealth investment in South Africa. Now, unfortunately, this is going to be the last episode of the series of talking points, but we will be back with something bigger and better in the months to come. So please make sure you subscribe to Wealth Masters TV, and we will keep you posted. There's some great content coming, some awesome extra little tidbits, so you don't want to miss that. Kasi, once again, thank you, and thanks everyone for tuning in.
Thanks,
and we'll see you guys soon. Group Talking Points. Thanks, Kasi. We'll see you soon.
Thanks,
bye-bye.